All right, I got a quick trivia question for you. Who said this? It's not the strongest of the species that survives, nor the most intelligent, but the one most adaptable to change. Charles Schultz, Charles Payne, or maybe Charles Darwin? Well, my next guest says it's a key to investing. I want to bring in now Niles Investment Management founder and portfolio manager, Dan Niles. And Dan, you say the key, though, really is to remain intellectually flexible and data dependent, but there's so much noise out there. I mean, how do you do it?
Well, I mean, I think trying to focus on the bigger picture helps you kind of keep your head in times like these, because it's really that which is kind of the touchstone going forward. So I think if you look at the beginning of this year, you've had a couple of things, right? In December, the Fed started QE light. So, that's very stimulative to the markets after selling bonds off their balance sheet prior to that. Then in Q1, you've got the big, beautiful bill, which will help tax refunds for consumers being about 100 to 150 billion more than normal, helping corporations with R&D tax credits and CapEx. And then you've got a new Fed chair coming in May who's going to want to cut rates by at least 100 basis points. And I think we've seen President Trump sort of starts off in an extreme position and then typically walks that back to get what he wants. And I'm hopeful that the situation in Greenland is going to be more along those lines versus something that ends up with something worse.
But it's interesting because today is sort of a microcosm of what you say. An example of why you say 2026 is going to be a choppy year, but maybe stronger in the beginning as these things come on, and then a little bit more questionable later on. So having said that, let's just talk about where the opportunities are, because we've got 5 stock picks from you. And you want to start with Boeing. It feels like you've got a common thread. Some big, well-known names that the shares of stocks have struggled a little bit. With Boeing, you like the backlog, but they've had a big backlog for some time and a free cash flow. What exactly is different now?
Well, the big difference is, if you remember, when you had that second fatal plane crash in 2019, their ability to self-certify their own planes was taken away. And in September of last year, they got a limited capability to do that. So you should see their production of planes this year being more than 2018 for the first time. And as a result of that, you should see their cash flow go from about negative 2 billion last year to low single digit billions this year and get to close to 10 billion by the end of the decade, which, by the way, is not a high bar to clear, because if you go back to 2018, they did about 14 billion in cash flow that year. So I think that's the difference. That's why it turns.
About 10 years ago or so, I used to have a list, 4 stocks, you never sell them. Boeing was on the list, and so was Nike. Nike was on the list too. You like Nike here again. They've got a new CEO. They're the press multiples. And again, it's another stock. We're going to bring up the chart as well so the audience can see that it's had these attempts, to sort of do well. And I guess the spark, what would be the spark to kind of turn this one around?
Well, there are really 2 sparks. One is remember what caused the problem for Nike in the first place. You brought in the former CEO of eBay, and he basically took Nike away from its roots and said, you know what, we're just going to focus on going direct.
Right.
Then they brought back this veteran from Nike's past, who was a 32-year veteran, Elliott Hill, who started off as an intern at Nike. And he said, look, we're going back to our roots. And what are our roots? We're going to focus on strong retail presence, not just direct. We're going to focus on sports, and we're going to focus on innovation. And now he's been there for a little over a year. And in my mind, it takes generally about a year to 2 years to see, for big companies like Nike, see these changes in philosophy start to take effect. And in the US, you actually saw revenues go from down about 11% year over year 2 quarters ago to actually up 9% in this most recent quarter. I think you're going to see Europe turn around next. Then you're going to finally see China, which is the most difficult for them, turn around after that. And the good news is you've got a very low valuation on an EV to sales basis, which is the lowest in a decade outside of the tariff-driven lows of last year. And so you have a nice margin of safety, which I also like. And to your point on Boeing and Nike, right? This goes back to the intellectual flexibility. If you said, well, you never want to sell them, you got absolutely destroyed over the last several years owning these names. But now I think it's the time to go, you know what? I think we have catalysts for change, and you want to
Right.
adapt to that.
And I also like the idea that you like the downside, right? You're considering that the risk management part of it. I just want to pick up on Apple. It's got a different chart. Obviously it's gone up, hasn't kept up with its Mag 7 peers recently. But you're saying, hey, they're going to be in the AI game. Of course, they've always had the luxury of waiting, right? They're such a big company. They don't have to always be first, but they always figure it out.
Yeah. Yeah, and I think more important than even the AI game is the fact that the big upgrade cycles in the past has been when you've increased the screen size or changed the form factor. So if you go back to the iPhone 6, for example, you had 7% revenue growth in the full year before that. You came into, and that's when you moved from the 4-inch screen to the 5.5-inch screen on the iPhone 6. The next year, you went from 7% growth to 28% growth as people upgraded and wanted that bigger screen. This year, for the first time, you're going to get a foldable phone. Samsung's had a foldable phone since 2019. So this is very, very late for Apple, but you combine the foldable screen size with AI capabilities, which are 2 years late. And I think you're going to see a very strong upgrade cycle, which will offset some of the concerns people have had recently about things like memory prices or services growth.
Dan, we don't have time for MPitch. PI, we'll cover that next time you're on the show. No, because I really appreciate the nuanced way that you go through these names, because everyone throws these symbols out, but understanding exactly why to own them and what the risk and upsides are is what we're trying to do on the show anyway. So thanks a lot, man. Happy New Year.